You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith, Senior Analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Good morning, Jim. Good to be back.
You were mentioning they might be writing tombstones in the sky on March 31st for TSX mining companies. Can you maybe explain?
Well, I think some of those tombstones are going to be literal ones because, in my understanding, and you can correct me if I'm wrong, Jim, on this, but I believe that the annual reports are filed on March 31st in Canada for the mining companies, and that's kind of maybe the most important one since it's an annual one. And so a lot of these companies that just don't have the goods anymore and don't have the money are going to go belly up when that reporting period comes because they're not going to have anything to say. Is that accurate from your perspective?
Yes, and you can't file an annual report unless you make sure your accountant is paid for any past business.
That's really interesting. So that might bring a level of transparency to the TSX that it hasn't seen in recent years in certain respects, right?
Absolutely.
Well, I tell you, I think this is going to be an interesting winnowing process, and what I'm thinking of it as the TSX miners' big die-off, and there are probably hundreds of companies, according to some accounts, that just aren't going to be around anymore. They don't even have enough money to pay those accountants that you're mentioning to write a report. And if they write a report, but they don't have a deposit or they don't have enough money to drill more than a few holes, what's the point anyway, you know? And some of them have already given up the ghost and going to things like promoting marijuana and stuff like that. And that, to me, is a real indicator of a mining company that probably isn't going to be back into the fold anytime soon when they have to move to promoting something of a whole different field.
And whether it's pot or something else, they're not experts in it.
Right. So I think this is a bad news, good news story. The bad news is that a lot of these companies aren't going to be around, some of which we thought might be. And so if we have them in our portfolio, it's not going to feel too good if we haven't gotten rid of them. However, the good news is it reminds me of an analogy that I would use of a crab molting its shell. You know, in order to grow, the crab has to get rid of the old shell because it's getting too small. It's pretty crowded there. And when it does get rid of the old shell, it is very vulnerable for a while it molts and creates a new one. But then when that new shell is created, it's got room to grow, it's safe again, and you can go ahead and progress. And so I think for investors, those of us who are badly scarred but yet surviving somehow, we've got a little bit of money left and we've got some good holdings, I think we're going to find it's going to be much easier to take a position and be right in it than it has been for most of the bull market, because most of the detritus, the stuff that's washed up on the beach is going to stay there, and we're going to be able to tell pretty easily what's good and what doesn't make sense at all. And so what I think we want to do is we want to be looking at royalty companies, the best ones of which are really cashed up now and can go out and start looking for new projects. And we want to really see that if a company just has money for a few drill holes and they have to issue, money to get, another $200,000, 10% of which goes to the underwriters before they drill a hole, chances are pretty good they're not going to hit a glory hole before they need to dilute their shares again and maybe do a 10-for-1 rollback. So it's going to be easier for us. And Jim, I'd like to point out a very incisive article which I just ran across a couple days ago. In fact, I think it was just posted yesterday, but the interview probably took place last week. And it was an interview with Brent Cook over at the Gold Report. And his title of this, which is really a good one, and I think it fits right in with our discussion today, it's called Invested During the Era of Peak Gold Discoveries. And Brent makes some very incisive comments that I think are critical for an understanding of the big picture for those of us that want to continue investing in the mining sector. And he talks about peak gold not so much as like, there's not enough gold around at any price. It's that most of the gold that has been discovered has been economically viable, and much of it which remains to be discovered probably never will be. And the reason for that, and Brett is much more of an expert in geology than I'll ever be, and that's why I look to him for guidance on some of these things, but he talks about the fact that for every 2.5 million ounce gold deposit, which is generally seen nowadays as being kind of a metric for a very possible, productive, economically viable deposit, 3.5 million ounces, for every one of those deposits that's out there, the roulette wheel is going to throw you back about another 10 that are 1 million ounce deposits. And those are valuable pretty much at only near surface. I mean, you can't go down hundreds of meters and necessarily make money on that, on a 1 million ounce deposit. The problem is for the drillers is they don't know what they have. They do an intercept, it's at depth, and they go, oh, we don't know what we have here, and so they drill it out and they spend maybe $50,000 a hole. And they find out when they drill out the deposit that it's a 1 million ounce deposit and it's down, 400 meters. And so that's not going to work. The math doesn't work. Well, they might find a 2.5 million ounce one down there, but they don't know until they drill it out at a pretty high cost per hole. And so this money is going to be mostly unproductive, and it's going to not turn out to be too well, and it's going to be hard to find those deposits. That doesn't even consider what happens when you find it. Okay, you've got 3, 4, 5 million ounces, but what about the regulatory climate? What about all this other stuff? What about the cost of doing it? So it's going to change things in that regard, and you're going to have peak productive, economically viable gold, even though there's a lot of gold out there. And as Brent points out, there's something like 20 million tons of gold in saltwater, but it's in parts per trillion, and it's not going to be viable anytime soon to try to mine it.
We'll have more with David Smith right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with David Smith, Senior Analyst for the Morgan Report. David, are there any companies out there right now who can actually make money with the low price of silver?
There are. In terms of silver, I think we need to make a distinction between primary silver producers, which produce maybe a third of the silver in the world or a quarter of it, and byproduct silver producers like the BHP Billotens of the world, which they produce millions of ounces of silver, but it's almost a footnote for them because they're making most of their money on on silver. Let's try that again. On lead, zinc, and copper. And so they are and have a different metric than the primary silver producers, but hardly any of the primaries are making money. There are a couple I've run across, and they're basically still just trading dollars. But I think from the standpoint of looking at gold and silver acquisition targets over the next few years, here's what the takeaway is, I feel, for people that are considering to invest or add to this field. First of all, there's going to be a continual consolidation of the survivors, and Brent points this out in his report. But this consolidation is going to mean, in my view, this is my personal view, you're going to see higher premiums being paid for those acquisition targets, whether it's a cash-rich royalty company that goes in and does a streaming agreement, or whether it's another company that's a producer that simply buys out the deposit and goes ahead and is going to produce out of it itself. And so where I've noticed over the last decade, probably a little longer than a decade, that a very common takeout price premium is about 35 or 40% over the closing day's price. So if you or I have a particular gold deposit exploration company that gets bought out tomorrow, the chances are that when there's a trading halt, that premium price to what it was today will be about 40% higher. But I think going forward, because there are so few of the quality deposits out there, that you're going to see, as the bigger companies attempt to fill their production pipeline, you're going to see premiums very commonly of 50 to maybe 100 or even 200% over the closing day's price. And so that's the potential upside that we have if we have a company that gets bought out. I think they're going to see much higher than the norm as the realization strikes the industry that there aren't that many good projects out there. And so that can be exciting, and it can be easier for us to find those projects because so much of the detritus has gone out, to sea, and especially as a result of this March 31st annual date that we have coming up for the annual reporting that you've been mentioning.
Right, and speaking of important dates, January 18th and 19th, it's the Vancouver Resource Conference. David, again, maybe remind our listeners about how important that is.
You know, this is a good one, and I'm really looking forward to it, not only in terms to inform myself, which I always learn a lot from listening to the other speakers there, but also to see how many people show up. And I really feel that the people that show up to this conference, which is one of the largest, if not the largest, resource sector conference in the world, they often get around 10,000 or more people showing up over 2 days. It's a Sunday, Monday event. I think there's going to be people that show up there are going to be able to really make some informed choices by speaking to management and by looking at the survivors and by listening at some of the top-notch speakers that you're going to hear there, including David Morgan, who will be one of the keynote speakers. I think they're going to find a target-rich environment for them to make informed decisions on going forward here as the bull market gets back into gear. And, you know, it's still not showing all of the signs of vitality that we want to see, that we can say, oh, a new major up leg is starting. But I really believe that the base is being, a solid base is being built for what is going to become a very vibrant and exciting bull market in the precious metals over the next 3 to 5 years on a fairly consistent basis once it gets that big new up leg underway.
And maybe just backtracking a bit, it's important to also remind people that if the prices do start going up for gold and silver, they can't instantly turn on a tap like they can with oil and increase the production to meet the demand.
That's an excellent point, Jim, and that happens to be one that I believe very firmly in. I think that the supply pipeline has been severely damaged over the last 4 or 5 years due to all sorts of reasons. Everything from companies buying uneconomic deposits that only worked at $2,000 gold and don't now, and so they've had to shed those deposits, sometimes almost facing bankruptcy to do it, but they've weakened their own purchasing power to buy the good stuff. And I think also the artificially low prices, which, as we mentioned, for silver are below the cost of production for almost all the primary silver miners, and the ultra-low interest rates that have been going on that don't make sense from an economic discovery standpoint, all of these things have poked holes in the supply, the resupply of gold and silver, and with this huge demand that's continuing to go on, but where India bought 28% of the mined silver last year, and where China bought the majority of the new mined gold supply last year. This type of thing, the companies are not going to be able to ramp right up and fill up the supply line, either psychologically, because they've really been damaged over the last 4 years, and they're not in a risk-taking mode, and because of the practicality, because they simply are not those many new deposits out there that can replenish what they produce. And remember, these companies, every one of them, I don't care how profitable a given mining company is, it has a depleting, wasting asset, because for every ounce it digs out of the ground, that's one less ounce it has that it can use to sell down the line. And so they're selling this gold and silver at marginal prices, and when the prices go up substantially, which I believe they're going to over the next few years, they're going to have a hard time replacing the gold that they sold at $1,200 and try to replace it so that they can sell it at $2,500 or $3,000. And they're going to have a hard time replacing the silver that they're just giving away at $16 an ounce. They're going to try to find silver to produce, to sell at $50 or $60 an ounce. It's not going to be an easy trick. And that's what's going to be another kind of a tailwind, I think, for gold and silver prices and for investors in those mining stocks and the physical metal as we move forward, going forward for the next 3 to 5 years, at least.
And I think about those reality shows like Bering Sea Gold. Those are ma and pa operations. I don't see them making, a major impact one way or another in the supply chain.
No, they're not going to. They're fun to watch. They're enjoyable to watch people. But it also shows what people will do to try to get an ounce of gold. And I'm always amazed, and we're not even talking about the Informa miners in Brazil and Africa that ruin the rainforest and ruin the environment, using cyanide and using mercury to get the metals out and then dumping the stuff in the river and polluting the river. I mean, but it's just amazing to me what throughout history humankind has done in order to get some gold. And sometimes they've done it honorably, and other times they've done it dishonorably, like the man who betrayed the 300 Spartans for his weight in gold and was buried by the Persians with it. So it's been a strong motivator throughout ages, and for all sorts of reasons, good, bad, and otherwise, people continue to seek the precious metals and to acquire them, and for many times very obvious and profitable and also life-saving reasons given the span of history of thousands of years.
And David, trying to keep some sanity in the business is why we talk to you.
Well, I try to keep a balance, but I'll tell you, sometimes it's pretty difficult. But, Jim, it's exciting and it's humbling. And when I think of there are all sorts of reasons while I'm still in it, one of which is to try to make a profit someday, but also it's the people that I associate with. And, so many of the people that I run into at these conferences and that I run into as I do reports and as I go on these mining tours, I went on one just a few weeks ago to Bolivia at 15,000 feet and had a hard time breathing, but it was an exciting project. But these are mostly good, well-intentioned people, and some of them are actually even capable, and that's what you want to find is people who can do the job and do it profitably so you can buy their mining company shares. But it's exciting and informative, and I do think that it's something that is well worth being involved in, at least from my perspective.
David, thanks very much for chatting with us.
You bet, Jim. It's been great talking to you today. Take care.
My guest has been David Smith, Senior Analyst for The Morgan Report, which you can find online at silver-investor.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.